Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday Market Recap Letter, October 7th, 2023. And remember, folks, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest better than Warren Buffett does right now. And this week, well, the market looked like it wanted to do its October crash thing on the news of a very big new jobs creation report on Friday morning, but then turned around 100% because wage pressure was reported to subside. Hey, any reason for a rally is really fine with us. And our weekly stock analysis video, Saia is the name in the transportation trucking industry that you probably never heard of, but this stock is up over 90% year to date, and we've had it in our portfolio for 5 years. And folks, this stock is a real winner. What's not to like about a company that's up 90% year to date? Believe me. And our ETF video, well, the tech ETF just got an all-out buy signal on our intermediate term indicator, and it's heavily weighted in our group of ETF portfolios. Why? Because of low debt. Yeah, however, the utilities ETF is down, and utilities are where you don't want to be when interest rates are rising. Nobody should be in this sector right now, folks, because of interest rates going up. That means utility stocks go down. And the whole ETF that we use, the XLU, down 20% so far this year. So much for the defensive industry theory, especially when our growth portfolio is up 30%. And our tech ETF and the semiconductor ETFs are all over 50%. So, folks, you got to be in the right areas at the right time. And let's get right to the market. And here is the S&P 500, and the red lines are volatility bands. So as the volatility increases, the bands widen. As the volatility subsides, the bands get closer together. That middle line in here, yep, this is the S&P 20-day moving average. And we can see this market was pushing down this bottom band. And folks, once the market, and in this case the S&P 500, goes outside the bottom band, there's a good chance that it will keep going. A lot of pressures exist in the market when it goes above or below that bottom band. And of course, this time of the year, when it goes below that bottom band, we have to be very, very careful. And then the market rallied a couple of days in here last week, and then all of a sudden started falling again, kind of tested in here, and here is, it was looking good for about 3 days in here, even though it kept going down, coming back up, kept going down, coming back up, and then finally Friday was down over 300 points, and this is the Dow I'm talking about. The Dow was down over 300 points and then reversed to close up almost 300 points. So we got this big reversal in here, and the important thing I want to show you down here is that the intermediate term indicator is just about to turn up. If we can get follow through this coming week, we're going to see a lot of movement in this stock market to the upside. This would be very, very nice to see, folks. And it's all about bonds, and that's in our daily letter that comes out every day, and you want to be part of that, folks. So let's go to the S&P 500 once again. Blue line is the 50-day moving average. Red line is the 200-day moving average. And you can see down here that we were testing that 200-day moving average for 4 days in a row. And folks, it could not break down below. In fact, it couldn't even touch it. So it looked fairly decent in here. And then we had this indicator up here, short-term indicator, was still positive. So even though the market looked like yuck during the week, but when you looked at it technically, you say, okay, this was holding in here. And this indicator was still not giving a sell signal. It was actually giving us a buy signal, especially at this point right in here, because this point was above this point. So we had this line going like that. And so that gives us a slightly bullish look at the market. And then when it kept testing 4 days in a row, this 200-day moving average, which is a big line in the sand, and then all of a sudden Friday, the market took off. And why did it take off? Because even though the jobs report came out stronger than expected, the wage pressure was not there. So when Paychex, which is one of the companies that keeps track of these numbers, and by the way, is a very good company, when Paychex came out and said, there's no wage pressure here. So that is good for inflation. So when I say good for inflation, I mean it's good that inflation is not being caused by increased wage pressure, because all you hear about on TV are the strikes that are going on. But when you look at the overall job creation, there was no wage pressure increase at that particular point. And that's good. Now, when we look over here, these gray lines represent the volume. Gray vertical lines represent the volume on the up days. The red lines represent the volume on the down days. The volume was not giving away which way this market wanted to go. And then on Friday, we had little bit higher than normal volume. So at least the volume was picking up as the market went up. Not much. We'd love to see, something like back here. We'd love to see something like that. But folks, at least the volume is picking up. Down here, intermediate term indicator sure does want to turn up, doesn't it? So we're going to have to keep track of what is going on during the week with our daily letter. So folks, make sure you read those, because every day is going to change this coming week. Why? Because the banks are going to start reporting earnings. We're talking about third quarter earnings, and two of the big banks report this week. And as the banks go, folks, so goes the economy. All right, remember, if you want to see this every day, read our letter every day, find out what's going on, sign up for the 2-week free subscription. You'll get all our portfolios, you'll get the daily letter for the next 2 weeks, and you'll find out exactly what's going on in the market. Just need your name and email. Go to BuffettandBeyond.com, sign up for that 2-week free subscription, and you got it every day, folks. And portfolio protection, we had these 410 SPY puts. This is for about $135,000 portfolio, and some of you love to be protected all the time, and that's why we have these puts, and we will roll them over when necessary. So we'll be looking at this October 20 put to roll over into January of 2024 is on its way, folks. So you keep an eye out for that. I don't know if it'll be this week or the following week, but soon we will roll this over, especially if we get a rally, because then the protection is very, very inexpensive. So folks, we had a tumultuous week this week, and I never use that word tumultuous, but we did. Very, very crazy week this week. That 200-day line, 200-day moving average was tested day after day all week long, as a matter of fact, starting on Tuesday. And finally, we resolved ourselves to the upside. Let's see if we can follow through this coming week. So meanwhile, good rally on Friday. Go out, have a good time this weekend, folks. Be with your family, be with your loved ones, walk on the beach, go play golf, watch television, whatever you want to do. Go out, have a good time, be safe, and folks, we'll see you back here on Monday.